Welcome to the Mining and Metallurgical Society of America webinar series. MMSA is an association of mineral resource professionals. Members represent all facets of mining and metallurgical interests, both domestic and internationally. If you are interested in becoming an MMSA member, be sure to check out our website at mmsa.net for information on the application process. MMSA has always been a cohesive group of senior people from the minerals industry. The society is dedicated to increasing public awareness and understanding about mining and why mined materials are essential to modern society and human well-being. The society concerns itself with fundamental principles and with problems facing the industry in such areas as legislation, economics, and education, as well as environmental concerns, labor relations, and health and safety. Representatives of the society from time to time testify before legislative bodies and provide advice to federal agencies. My name is Andrea Brickey. I am currently the MMSA president. I am, however, your substitute host for this meeting. Our social media director, Kristen Guerin-Davy, was unable to attend today, so I'm sorry you get the substitute, but I'll do my best. Today's webinar title is Mining for Nutrients, the Evolving Role of Phosphates and Potash, and let's not forget about nitrogen, by Alberto Persona, Associate Director of Fertilizer Analytics, Verticon, with S&P Global Commodities Insight. Questions can be entered in the chat, and I will present those questions to the speaker at the end of the presentation. Please turn off your cameras and keep your microphones muted unless you are asking a question. Now I'm going to turn things over to our webinar chair for our organization, Curtis Clark, to introduce our guest speaker.
Thank you, Andrea, and welcome everyone. Alberto Persona is a member of the fertilizers team within S&P Global Commodity Insights, where he oversees the group's analysis of phosphate products, including fertilizers, raw materials, and non-fertilizer uses. He is also leading the Sustainability in Fertilizers team. Alberto began his career at FEAM, Fondazione Enrico Mattei of Italy, before moving on to the CRU group, followed by Verticon, which joined S&P Global in 2015. Alberto holds 2 Master of Science in Economics degrees, one from the London School of Economics and one from Ca' Foscari University of Venice. Alberto, please, we look forward to your presentation.
Well, thank you very much, Curtis, for the introduction. Thank you, Andrea, for organizing. And of course, thank you all for joining. My name is Alberto. I'm currently based in the UK now. That's why you see a relatively empty office behind me, if you could see my camera. And I'm here today to talk about the wonderful world of mining for nutrients. As I introduced, I've been looking at the phosphate market as a market analyst for the past 12 years, which I will admit was not one of my dreams when I was growing up. I wasn't thinking astronaut, ninja, phosphate analyst, but I have to say I loved it. And I hope to convey some of that passion to you today, as well as some useful insights. Very quickly, every presentation in our company needs the blurb at the beginning about trademarks and terms and conditions, which I will happily skip through. And as a very, very quick introduction, for those who don't know S&P Global Commodity Insights, we are indeed part of the same group that's famous in the news for doing ratings or for publishing the S&P 500 index in financial markets. The Commodity Insights division is the dedicated arm of this big corporate entity, which looks at various types of commodities. We look at everything from upstream oil and gas into uses such as refining. We look at trade data. We look at the production of chemicals, of food. And of course, within the agribusiness group, we have crop inputs. And we try and do a series of different types of analysis, such as what's the market today? What are the trends and sort of drivers in the short term? How about the long term? What are the imbalances that we see changing? And I provide here a simple example. It's kind of the reflection of the infamous butterfly who decided to open its wings and causes a tornado. We try and track those winds and tornadoes in our daily work. But enough for the introduction. I will now try and start on the content of today's presentation. I'll give a very quick refresher of the value chain, the inevitably incestuous relationship between nitrogen, phosphates, and potash, and I will also mention sulfur. We'll look at what the current market structure is for these nutrients, understanding which markets are more or less concentrated on the production side, on the international trade side. We'll have a quick look at demand drivers. So these are products that are traditionally referred as fertilizer products, but more and more the non-fertilizer uses are becoming more prominent, more impactful in these industries. And of course, we'll look at what some hints of what the future could look ahead in terms of opportunities for investment and what the challenges would be. I promised MSA that I would also include some discussion on the recent retaliatory tariffs, the never-ending tango that's coming out of the White House. The music hasn't stopped, but let's have a look at what the current situation is in terms of exposure and potential impact, safe in the knowledge that the actual impact still will be determined by the evolution. I'll try and avoid rabbit holes, if anything, because as we all know, if there's too many rabbit holes in a field, it's very hard to get a mining permit. So we can keep the rabbit holes for the Q&A at the end, and I'll be happy to take questions even beyond the content provided. So the nitrogen, phosphate, potassium value chain is quite simple, isn't it? You have nitrogen. With nitrogen, you make ammonia, and with ammonia, you make fertilizers. You have a phosphate ore, which you upgrade to a concentrate, and you make phosphate fertilizers. And if you have a potash ore, you actually just process into something that's already a viable phosphate fertilizer, a potash fertilizer. For example, potassium chloride, by far the most common form of potash. But it isn't that simple. You actually, on the nitrogen side, need a hydrocarbon as a starter, and you produce syngas to gather that hydrogen that you need to convince atmospheric nitrogen to bond into an ammonia molecule. And even at the ammonia stage, you start splitting between nitric acid and urea. And with nitric acid, you produce nitrates, so you already have more than one type. Also, most phosphate concentrate needs to go and be manufactured into phosphoric acid to untap the full potential of producing high-grade commodity products. To produce phosphoric acid, you'll need a sulfuric acid. To produce sulfuric acid, you need sulfur. And it doesn't get any easier because when you burn a hydrocarbon, you get carbon dioxide, and that carbon dioxide is actually used in the urea value chain. Sulfide ores for base metals are also another source of sulfuric acid, and the sulfur that we mentioned earlier is a byproduct of hydrocarbon refining when the hydrocarbon is sour enough. So perhaps if we then start looking, and this is still simplified, at the various interrelationships between the industrial assets, the initial minerals, their composition, their grade, and the interactions between primary, secondary, and reprocessed products, we end up having a genuinely difficult value chain, a fun one to analyze nonetheless. So I will start now showing a few slides highlighting some very key metrics, like high-level metrics on each of these value chains, just to give a hint of which markets are more or less concentrated. And I will have very similar visuals across N, P, and K. I'll start with N and using ammonia as the starter chemical, which for the entire value chain. On the left, I'm showing a three-plot diagram of key producers. And you'll see in the subtitle of the slide that total production of ammonia is measured for 2024 just short of 200 million tons, with China being a particularly important producer, India, Russia, and the United States following, and then other significant producers such as Saudi Arabia, Iran, Egypt. You'll easily spot that perhaps with the exception of India, which is highly reliant on imports of hydrocarbons, and with the exception of China, where still coal-based manufacturing is a significant part of the overall production profile, the size of each square tends to reflect access to primary resource, to a hydrocarbon, particularly natural gas being by far and large the most used starting input in ammonia manufacturing with the Haber-Bosch process. On the right, I sincerely apologize for not maintaining the same color scheme as the left chart. I have tried, I have miserably failed. But you see the same tree map chart, but showing only exports. And you see how this becomes immediately with larger squares and a sign of very much stronger concentration on the supply side. And I'll draw your attention again to the subtitle. Out of close to 200 million tons of ammonia produced, only about 17 million tons are exported. So when it comes to price formation, clearly there are domestic markets and domestic transactions that are not captured by the exports metric, but you can see how the concentration is actually quite high. In the case of ammonia, this concentration is actually not necessarily matched in the same scale when we look at the mirror image of trade, which is imports. We do have larger importers, and particularly looking at the top 5 importers, we are close to 40% of international trade. But nonetheless, the demand side of the equation is quite diversified, which means suppliers have a relatively strong bargaining power, and many buyers, especially the smaller ones, do not have as much bargaining power when it comes to price formation. And lastly, as a quick reminder or sort of informative chart on the right, we want to show the relative size of fertilizer uses, so conversion into products such as urea, nitrates, or ammonia use in ammoniated phosphates or potassium nitrate and all of these nitrogen-bearing fertilizers, versus non-fertilizer uses. Ammonia has a lot of uses, such as production of nylon fiber through caprolactam or acrylonitrile, which ends up in Lego bricks, or AdBlue for reducing NOx emissions in diesel engines. These, as you can see, have actually accounted for the majority of growth and account for something like 15 to 20% of total demand, which is a fairly sizable contribution. Now let's look boringly at the same charts on phosphates. Again, we have production, funnily enough, around a similar level in total volume, around just north of 200 million tons in 2024. And again, we have exports being only a fraction of this, 30 million tons. We still see somewhat more concentrated supply side. Clearly, this is a mineral. It's an industry that starts with a mineral, and policies and governments can change many things. It's rarely the case that they can change geology. And we see just how dominant China, Morocco, the United States, Russia, and Jordan are, followed by countries like Saudi Arabia and Egypt, relatively recent joiners in the phosphate industry overall, and possibly underinvested Brazil and promising Peru, just adding to many others. The export side of the equation is even more concentrated. You see immediately that China has dropped. China is still there. It's just this little square on the bottom right here. So as much as China produces, most, if not virtually all of it, stays within the country, while Jordan maintains that very, very strong exposure. Many of you may wonder, is Morocco really second? The answer is yes. Morocco has long been interpreted as by far the largest exporter of phosphate rock in the world, has maintained that position continuously since the 1970s until 2023, when it lost and became actually in 2023 the 4th largest exporter and gained back some momentum in 2024, becoming the 2nd one again. The reason was the price was too high and alternatives existed. It was a year when Syria temporarily revived its presence in the market, which then lost again with the more recent change in government in the country in late 2024. Unlike ammonia, the demand side, the import side of international trade is also quite concentrated. We have India accounting for a very significant side of total import demand. Yes, the United States is a significant importer, but all of these imports are actually within the same corporate entity, which manages chemical plants in the United States and mining assets in the United States and in Peru. So this is not really a merchant transaction. And then you have importers such as Indonesia. Here it is China again. China has emerged as a significant importer in recent years, having long been self-sufficient since at least 2006. And as you can see, the squares get quickly quite small. So we're talking about, again, a market with a very strong supplier pricing power and not as strong a bargaining power, like pricing power from the buyer's point of view. And in the context of fertilizers versus non-fertilizer uses, perhaps a slightly smaller contribution of non-fertilizer uses, but still this is a sector which we will explore a little bit more in detail later, because growth in these two types of end uses is expected to start diverging quite significantly for phosphates. And last but very much not least, potash. Potash, which is much cleaner. I mean, you look at this chart, and this chart actually makes much more sense to show, because it's a neater and cleaner, big squares, identifiable, and many of them actually do maintain, for once, the same color coding. But we have a production which was smaller. 75 million tons is our estimate for 2024. And crucially, the vast majority of potash is actually traded. 60 million tons in 2024 were exported, and the two charts match very well. Again, China becomes an importer, is a net importer of potash products. But you see just how concentrated in the hands of very few companies, not just countries, but even companies, in the case of Canada, export organizations. And this is, yeah, again, not matched by the import side, despite the very, very strong importance of individual countries such as US, Brazil, and China, because more so than phosphates and potash and ammonia, this is a heavily resource-based industry with very few options. And we'll understand why later on in the presentation. But there's no surprise here that the bargaining power tends to lie with suppliers, with these very few export organizations or individual corporate entities. And more so than all the previous ones, fertilizer use is by far the largest driver. Potash has very important non-fertilizer uses. It's used like technical grade potassium chloride is used in the in oil rigs. It's used also in the production of food salts and concentrated solar power. But you see, this is the most fertilizer exposed industry. Now, I mentioned fertilizer a lot. Clearly, fertilizer demand since the 1980s, which is when we started tracking data, has grown quite considerably. Over the course of the past 40-something years, it has basically doubled as an industry. And you can easily see that the most significant contribution to this growth that lies in Asia. This is India and China have done a lot of the heavy lifting. However, you will see that this seems to have somewhat flatlined since 2017 onwards. Two things have happened. First of all, the number of disruptions has increased. We have COVID, and COVID, funnily enough, didn't really affect this industry. The fertilizer industry was considered essential in the legislation of most countries, and therefore was not subject to any of the trade or product movement or operational bottlenecks that COVID-19 caused in 2020. What did happen, though, is that in 2021, the energy crisis started to hit, and that was a big impact. And that led to 2022, when even the invasion of Russia and Ukraine, Russia's invasion of Ukraine, significantly affected access to Russian and Belarusian product in terms of either sanctions or self-sanctioning measures imposed by the market. But another important long-term driver of this flatlining is how the world is starting to pay attention to over-application of fertilizers. And this is very different across nutrients. You see, what I'm showing here is a ratio of the actual movement, like apparent demand of nutrients in the form of potassium chloride, potassium sulfate, diammonium phosphate, urea, relative to a metric, which is the theoretical agronomically sensible optimal requirement, depending on the various crop mix in various countries. Both nitrogen and phosphate sat significantly above 1. This was partly corrected in the 1990s because much of this over-application was happening in the Soviet Union, which was a very resource-rich bloc, and therefore even encouraged the over-subsidized prices, which caused over-application. But slowly but steadily, the trend for this ratio is going down. More governments are now paying attention to urea burn or nitrogen burn, so soil degradation or eutrophication of water reserves in the case of phosphates particularly. This is perhaps a slightly unsung and under-analyzed long-term trend that we expect will in fact accelerate in the 2020s and 2030s, which means we could genuinely produce a lot more crops with fewer nutrients, with lower volumes of these products, and therefore with lower mining output. There's areas that still need to apply more, there's areas that apply less, and therefore this will balance to one extent in the long term. But overall, at a global level, we see that the trend is quite clear. And it is also clear that potash is suffering from slightly different illnesses, which is the inability of potash to actually get used up to the optimal level. Many more countries, the majority of countries, under-applies potash structurally. Two notable examples that always come to mind are Argentina and Ukraine. They have the luxury of under-applying potash because there are sufficient soil nutrients in their very rich soils. But we're reaching a point where the yield response on farms is starting to be quite significant to potash and phosphates in these countries. So as much as we are expecting nitrogen and phosphate to continue on this declining rate or ratio between theoretical requirement and actual application and requirement in order, we will expect potash to instead gather some pace and become a more important nutrient in the balance sheet of farmers. And having quickly looked at fertilizer uses, two examples that I want to give of important non-fertilizer uses, one for phosphates and one for potash, are both related to the broader term of energy transition. A big wave which is likely to receive a lot of subsidies and to change some of the entrenched industrial structures on the power side, on the overall energy economy, which by far trumps the size of the fertilizer industry. LFP, in particular, I look on the left, is becoming and expected to become a growing driver of the demand for purified phosphoric acid. I do need to stress very much the word purified because these are processes, chemical processes that are extremely fickle, highly proprietary, and very expensive to license. Therefore, this is a particularly concentrated market. And the growth in LFP production is expected to cause at some point in the near future, somewhere around the early 30s, a little bit of a capacity crunch because currently a lot of the manufacturing of industrial grade phosphates happens in China. But certainly, I guess nobody will disagree that parts of the world, for different reasons, are trying to get a bit more direct ownership and control over strategic industrial sectors and possibly vehicle electrification and the electrification of the car fleet of many countries is considered as a strategic goal quite by most. And this is an industry which is quite lagging in terms of investment and is hard to convince investment funds to actually put money where their words are. On the right, much smaller in scale, but I do want to still talk about things like concentrated solar plants. Concentrated solar plants are basically these big pillars which are surrounded by concentric rings of mirrors, which heat up a salt mix, and that salt mix will then release heat to maintain solar power production operating even during cloudy days or at night. So it's a way to stabilize solar power production. Small in scale, but it can cause very big peaks in potassium nitrate demand. And these peaks do have a very big impact in the potassium nitrate market because potassium nitrate is used in the salt mix and you need to load up your CSP plant. You can see just how strong you can have growth in specific countries in specific years, then inevitably subsiding down. But the rate of adoption of CSP plants in many parts of the world, especially in very sunny and dry parts of the world, is gathering quite a lot of attention because it bypasses a lot of the complexities that can lie in running intermittent solar production. Saudi Arabia is expected to be a big driver in the short term. With these new demand drivers, so with the demand expected to grow, there is, of course, an expectation that the supply side will have scope to grow. One of the very big challenges, however, for any given prospective producer or junior miner is that as we showed before, they face rather sizable incumbent players in some of these segments, in some of the sectors in the NPK value chain. But also they face a lot of competition with other projects. I'm showing here for phosphate rock and potash, our estimate for operational capacity today, our projection for capacity that will be needed in the future to meet expected growing demand, and the sum of all projects that if they were started, if work started today, they could become operational by 2030. You just see how there's an oversupply of projects, and it's very difficult for individual project developers to gather enough attention from the investment community to actually get the required funding. The two charts are meaningfully different in one way. In the case of phosphate rock, there's a lot of assumed capacity. So these are projects that don't exist yet, but which we believe incumbent producers can easily trigger as soon as needed. In the case of potash, there's more actual confirmed and believable capacity, notably the Janssen project by BHP Billiton, or in the UK, the Sirius Minerals polyhalite project. But there's no hypothetical capacity. All of these other projects will struggle to get attention because the potash market structurally has lower need for new producers, and they instead encourages existing producers and incumbents to adjust their operating rate closer to their full potential capacity. The problem in mining is certainly not the cost of operating a mine. Depending on the geology, how favorable it is, and access to labor, and the requirement for various beneficiation processes and metallurgical upgrades from going from an ore to a concentrate. In the case of phosphate rock, rarely as operating cost would exceed $70 per ton of concentrate. It's a bit of a spurious comparison because we, of course, no phosphate concentrate is equal to each other, but the order of magnitude is below $100 a ton. Prices can easily exceed $20 to $100 a ton in peak cycles, but the risk of incumbents actually adjusting that pricing or demand being disrupted is very high. On MOP, the cost curve is a little bit boring especially for the entire first half, where Eurasia and to an extent North America, i.e. most of Canada, accounting for a somewhat flat bit of the cost curve. Again, prices fluctuate for potash between sometimes 250 at the low end or in excess of $600 a ton on the high end. The big challenge for both these is capital costs. Phosphate rock mines are perhaps a lot less expensive. You could add perhaps another $45, $60, depending on the interest rate and on your loan duration. So still maintaining a profitability at the upper end of the cycle, but being dangerously close to your trend values, which therefore is not as comfortable a position. And in the case of MOP or potassium chloride, the capital requirements are a lot expensive. Phosphate rock mines, you need hundreds of millions of dollars. For potash, you need actually billions of dollars, and that can add $75 to $100 a ton of your to your total economic cost, which is scary for investors. At low cycles, you risk having a total economic loss even in the region of 20%, which is quite substantial from the point of view of a finance. Now moving on to the last active charty slide of my presentation. We look here at retaliatory tariffs. So I won't go into details of what was announced, has then been announced, the revisions, the counter revisions, and the ongoing discussions, because we would spend a lot of time, and again, that would be a very big rabbit hole. What I want to show here is on the left, for key products in the fertilizer value chain, I'm comparing US demand of these products versus their imports in 2024 to highlight which products are basically more essential to be maintained as part of free trade. Clearly, MOP or potassium chloride stands out as a product which is almost virtually all imported, and therefore very quickly the US administration, from its first mentions of tariffs in February to the first short-lived enactment of retaliatory tariffs, declared potash as essential, reminded the market of USMCA rule of origin compliance, making the product, the specific product, exempt from even the baseline tariffs for Mexico and Canada, and therefore shifting the attention away from potash and more perhaps on nitrogen and phosphate fertilizers. On the right, we see the relative share of key exporters, and you will immediately note that for potassium chloride, sulfur, and sulfuric acid, the role of Canada is hard to downplay. In the case of sulfuric acid, Canada plus Mexico account for a significant majority of the total volumes. And in the case of ammonia as well, Canada is a very important supplier, particularly for markets which are further from the Atlantic seaboard, which instead has access to imports from Trinidad and Tobago. Crucially not part of USMCA, even though there are some US corporate entities with direct equity stakes in key export producers and exporters in the small Caribbean island. One of the best site visits that you can ever have if you want to visit a chemical complex with wonderful beachside views and turtles. In the case of phosphates, there's been additional disruptions in 2020-21 in the form of countervailing duties against Russia and Morocco, which were before two of the main exporters to the US markets and suppliers. Now this has rebalanced quite significantly with Saudi Arabia, Jordan, Egypt, and to an extent Mexico, even Australia starting exporting more material. So this is a market which has been forced to become more diversified in terms of the supply side or the procurement side. Nitrogen fertilizers are also rather diverse, given the larger number of producers and the more interconnected and diversifiable trade flows. Just to leave with some initial conclusions, and then we can certainly explore the world of questions and answers. These are very interconnected value chains between nitrogen, phosphates, potash, and sulfur, and of course, almost any other chemical element we can talk about. In my analysis, sometimes I need to talk about cadmium, rare earth elements, sodium, and anything that you can add to the list. And there are very important indirect connections to the world of hydrocarbons and metals, which are, of course, large, impactful industries. These are resource-based industries. There's a very strong competitive advantage coming from access to one or many of the materials that we've mentioned. And especially when looking in the future, we do still expect growth to continue in terms of total demand, but there are some frictions and some limitations on the future expectations for the fertilizer sectors and some more bullish claims or desires when it comes to the industrial sectors. There is still a very, very strong challenge, which is raising capital, very large upfront capex, and role of very strong incumbents in many of these sectors. So it's difficult for juniors to bring a credible investment plan or marketing material, which doesn't risk upsetting a potential investor if the size is too large. And with that, I will leave you with my email address with a somewhat generic list of phone numbers and a couple of links, all of which you will receive as part of the slide pack through Andrea and MMSA. Thank you very much for listening, assuming you listen, that is. And let's move on to the questions and answers session.
Thank you so much for that excellent presentation, Alberto. And we also want to thank all of our attendees for joining in on this webinar.
Thank you, Alberto. I have a couple of questions after your presentation. Very good. And I don't know if you have any information about the why China imports phosphates. I understand that China is a closed market in terms of the phosphate, but I am curious to know why they are important. And the other is about Morocco overcapacity. Where I understand that Morocco is the second producer of phosphate in the world, but I think that after to see your picture is lose some market in the world because it's the second, right? This is I understand, or I am wrong? Sorry.
Yes, so I'll tackle China first. The emergence of like significant import demand from China is a relatively recent phenomenon. There were some signs in 2022, and then it expanded more in 2023, 2024. The reasons are many, but mostly they lie with a stronger degree of control by the Chinese government in terms of the exploitation of their resources. There's long-running commentary about the quality and magnitude of phosphate reserves in China, and the country's government is starting to limit mining rates to ensure the longevity of these resources for the Chinese market. This has the roots in strategic sectors like vehicle electrification and emerging new uses for phosphates, alongside one of the strongest rates of improvement on nutrient efficiency. But what it did is it left some of the private sector enterprises short of phosphate rock from domestic merchant miners. They are therefore there is a scope for private sector enterprises importing phosphate rock. They tend to be very low-grade phosphate rock from very convenient locations like Egypt, like price-convenient locations like Egypt, Syria, or Algeria. More recently, Jordan. And it's used as part of a blend, so that even though they can't access as much as they would like from the domestic market, they still have this additional source. I will only add the comment that this is an extremely price-sensitive trade flow. It can interrupt and go from hero to zero quarter on quarter. And to give you an example, some of the imports in 2024 for China were reported at $90 CFR, which net back to something like $20 or $30 FOB Egypt. So it's a large volume. It's a good source of dollars, which Egypt desperately needs after having lost a lot of the revenue from Suez Canal crossings as a consequence of the Houthi attacks. But it's not necessarily giving an incredible profit. It's giving revenue, but not unit profit.
All right.
In terms of Morocco, Morocco does maintain strategic overcapacity whereby they can credibly threaten any potential new entrants to increase production rates, slash prices, and defend their market share. They have, however, faced a very strong bottleneck in 2024. They are still the second largest producer of phosphate rock. They became the fourth largest exporter in 2023, and they are now the second largest exporter in 2024. And that's because they just kept their pricing strategy too aggressive. And they were, basically what happened is Morocco wanted to sell phosphate rock at the same equivalent price as their fertilizer products or other downstream uses. They thought, well, we are the largest exporters, people will buy. But actually the importers thought, well, wait a moment, let me invest in my chemical plant and let me make sure that I can accept more diverse types of phosphate concentrate. I can be a bit more flexible than I used to be. And that hasn't changed. That investment is still there. And therefore, Morocco has lost a bit of the pricing power in the short term.
Excellent. Okay, thank you. I appreciate your answer.
Thank you.
Thank you, Marco. We have a few questions in the chat window. I'll start with this one. Brazil has identified potash deposits in the Amazon basin, yet developments of Brazilian potash is really no closer than it was a decade ago. What are the opportunities for Brazil to become more self-sufficient?
So both from phosphates and potash and nitrogen, there was this Lula program, President Lula's earlier tenure promised self-sufficiency in Brazil of all fertilizers by 2015. Brazil is today the largest importer of fertilizer, so we can all infer how successful that policy was. And there's been a revival of that promise, partly by Bolsonaro and then now by Lula's current term. There is a big issue in Brazil, which is Brazilians themselves call the Brazil cost. There's a lot of red tape still. There's occasionally some challenges in terms of plant maintenance and access to spares. And in the specific case of the Amazonas project, permitting is quite challenging. We're talking about protected areas. The project owners claim to have received sufficient permits to extract potash, but there are many local players who are concerned about whether deforestation or any potential impact on the local ecosystem could be eventually subject to liability when looking at crop prices. The European Commission is putting more stringent rules about deforestation for soya crops to be imported in Europe, and people are just genuinely concerned. So overall, we do believe Brazil is a very likely and important candidate for additional investment, but that investment at the moment is at most second or third in line against more promising developments in more stable, like regulatorily stable environments. And it could actually take a while for these to be funded. And in the case, again, in the specific case of the Amazon project, there's it's not a lot of capacity, so it won't really bite much into the country's overall net deficit, and therefore, why bother has been one of the reactions by the investment community.
Great, thank you. Our next question is kind of maybe a little bit more in your neighborhood here. Serious Minerals appears to be slowing down its development program in Whitby, England. Do you have any current information on the schedule?
Yes, we do. They indeed, there's been a slowdown in activity when the Anglo BHP, there were some corporate developments that caused a pause and temporary interaction in the development. However, the actual progress in terms of sinking the shaft and starting the continuous mining underground is sufficiently committed. It would be very, very difficult to explain to shareholders that having spent billions on it, we're now not going to do anything. And it's an incredibly impressive asset in that it's a very, very large mine, which is underground in a natural reserve, and you don't see it. It's all underground and doesn't affect the ecosystem around it. It's a masterpiece of environmental engineering. Their current schedule sees some volumes, a phased approach, which is the favorite approach when a project is too large and unmanageable. Let's make it phased. It's still as large as before, but it's not as upsetting. And we have some volumes expected in 2028. That's our latest kind of projection. Could easily be delayed into 2029.
Great. We have another question. Can you explain again the concept of the ratio of demand to removal? They missed the part about the removal.
I will have to say to Art, you didn't miss it. I forgot to mention it and define it. So it's on me, it's not on you. The concept of removal is the amount of nutrient that is harvested away. So the nitrogen in the protein of soya, for example, or which is a bad example because it's a legume, or in the phosphate and potash that's removed from the harvested bit of the plant, and therefore not subject to potential recycling in the form of no-till farming practices or other solubilizing or biomass-based processes. So this is the amount that you'll need to, in theory, replenish every year. And we like this approach in our analysis because sometimes you have higher or lower yields, which means you could have over-applied even if you were targeting optimal levels, but the weather was bad, you end up having over-applied, but your removal captures the amount by which you over-applied. So that's why we like this in our analysis for short and long-term dynamics. But the removal is how much you need to replenish because you are removing that from the soil. The demand is how much you are applying on the soil. And therefore, there's short-term imbalances due to wrong expectations or prevailing practices or bottlenecks. But in the long term, we can sensibly think that that removal will trend towards a one-on-one ratio. But this actually leads me to partly answering, if you don't mind, Andrew's question on biofertilizers and phosphate solubilizers and nitrogen fixers. Because indeed, that removal number tells me how much the plant needs. It is possibly erroneous to think that that chemical fertilizers are the only viable supply source towards that removal number. We are already experiencing a big win by the nitrogen fixing bacteria business in the overall nitrogen fertilizer scheme. And we're projecting something like 5 to 10% of total nitrogen demand that should be eventually met by these type of alternative products. If anything, because we have a part of our business that looks at farming costs, applying a nitrogen fixing bacteria costs about 1/10 per unit of nitrogen or per hectare compared to a chemical fertilizer. So it's a very, very big advantage from the farmer's point of view. It's fickle, it's risky because it's very temperamental towards weather and atmospheric conditions, but it is a lot cheaper, more than compensate for this riskiness. Likewise, on phosphate solubilizers, there are certainly some promising things. We think, if you asked me last year, we would have been a little bit more cautious about overplaying phosphate solubilizers. But today, phosphates are, by at least a factor of 2, the most expensive nutrient compared to potash and nitrogen. And therefore, alternatives are gaining momentum. And in the farming world, what you are very concerned to do is changing your practices the first or second year. But once you tried something, if it worked, you keep using it. And we're accelerating actually our expectations for biofertilizers and phosphate solubilizers in our demand.
Fascinating. It's really interesting. It's this new technology helping us do all these, grow food and things. I do want to just point out a few announcements here. We will be having another webinar. We had planned for one on the 23rd. That one is going to get moved. And if you do have something, if you are in the Denver area on May 23rd, I encourage you to attend the Colorado section luncheon, where you can apply, register for that on our webpage, mmsa.net, and our guest speaker for there will be Doug Silver. All of our webinars are uploaded to YouTube and can be accessed through the mmsa.net website. The video of this webinar should be available within a week. The MMSA webinars are supported by the MMSA Jackling Foundation, and we will also be posting the video as well as the slides provided by our presenter on the MMSA website. If you are interested in becoming an MMSA member, please be sure to check out our website and look for the application process, or reach out to one of our members and they will be happy to tell you how to go about applying. All right, this webinar is now ended. Thank you all for your participation.